Bitcoin's price has dropped below $31,000, indicating greater volatility. As BTC declines in a risk-off climate, the supercycle theory fades into the background. The present market environment puts claims of BTC being an inflation hedge to the test. A sell-off in Bitcoin has begun, and traders are keeping a watch on the current market movement. Following today's drop, the digital asset might be on track for its lowest closing in 2021. Investors are losing faith in a larger environment. If we're in the midst of a Bitcoin supercycle, the end of it may trigger a market meltdown. The end of the Bitcoin supercycle is most likely to blame for the price drop. A supercycle is a 10-year bull market in commodities. Nevertheless, financial experts have used the phrase to apply to Bitcoin. Increased price action with a positive feedback loop is referred to as a supercycle. Prices rise as a result of a mix of investor optimism and confirmation bias. His story parallels the sequence of events that led to Bitcoin's high price of $64,863 in mid-April. The bull market that began in 2020 is similar to a supercycle, and it looks to be nearing the finish. Regardless, the conclusion of the Bitcoin supercycle is marked by a precipitous price drop. If you enjoy this video, please subscribe to this YouTube channel for more videos. The present risk-off climate has traders on high alert, fearing a slowdown in growth in the second half of 2021. Keith Lerner, the chief market strategist at Trust Advisory Services, stated that crypto investors have long felt that Bitcoin is a hedge against inflation, emphasizing the necessity of trader confidence for Bitcoin price rise. BTC bolstered this story a month before its peak price by shielding holders against a falling US dollar. Concerns over inflation halted the trend, and Bitcoin's price was halved just after reaching an all-time high. This is around the same period when most analysts expected Bitcoin would become more valued. Instead, the leading cryptocurrency lost 50% of its value versus the US dollar. In an uncertain macro environment, hedge against inflation confronts externalities. In the face of the so-called Great Mining Shift from China to North America, the Bitcoin network has proven its resiliency. More than 40% of BTC miners have stopped working. Despite this, the network has withstood regulatory examination and has provided traders with a hedge against inflation for the better part of a decade. The increasing unpredictability of the macro environment has had a detrimental influence on Bitcoin pricing, but crypto Twitter refuses to let the debate die, and at BTC Archive has argued that Bitcoin purchased at lower prices is a hedge against present inflation, thereby bolstering the narrative.